This program was brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness. With the people, products, and technology to take you there, it's why they say, at PennyMac, greatness lives here.
Welcome to The Interest. I'm Mike Savino. It was just earlier this summer that the rate for the 30-year fix seemed destined for 6%, but the market has been especially volatile, and rates have plunged since then. In fact, the rate for the 30-year fixed is now below 5% for the first time since April. The average rate of 4.99 is a drop of 0.3 of a percentage point from last week, and it continues to fall from a peak of 5.81 in late June. The 15-year fixed is also sliding. At 4.26%, the average rate is down from its peak of 4.92. An economist for Freddie Mac says various economic conditions will continue to make the mortgage market unstable. The high uncertainty surrounding inflation and other factors will likely cause rates to remain variable, especially as the Federal Reserve attempts to navigate the current economic environment. So rates are coming down, but are you still finding it harder to get loans approved? Some banks have already tightened their credit standards, and senior loan officers are worried that trend will continue for the rest of the year. So how do you work through that and get your loans approved? Our own Sarah Wolak has some tips from an expert.
Prepping the consumer at the beginning is so important.
As lenders tighten their credit standards, it can be harder and harder to get your customers' mortgages approved. A recent Federal Reserve study found roughly 1 in 4 banks have already tightened their standards, and many senior loan officers worry that this will only grow thanks to various factors.
We have interest rates to deal with, we have the cost of consumer goods increasing, but not necessarily everybody's income is increasing.
That can make it tough to get your borrower's mortgage approved. Not only are standards getting tighter, but borrowers may not have as much money to put aside for monthly payments as other types of loans also go up.
Just 2 years ago, we were seeing on credit reports the average car payment being like $400. The average car payment today is $800 to, we're seeing $1,100, $1,200 car payments.
Marty Remillard says that's why it's important to take time with your borrower. Talk to them about how to improve their credit profile before they try to close on a house.
So a good prep time with the borrower in advance is essential today. Anybody not doing that will miss out.
That can include talking to them about possibly using money set aside for a down payment to instead pay off credit card debt, and taking advantage of the parts of the home buying process meant to protect them.
We always encourage everybody to use an appraisal contingency to make sure they're not overpaying. They're not getting themselves upside down in the house from the beginning.
With the market cooling, Remillard says it's easier to convince borrowers to take their time. But regardless of conditions, it's important to make sure buyers are getting a house that they can afford.
Never mind the pretty colored walls and the nice kitchen cabinets. Let's make sure the house is going to sustain its value, and you have the funds to be able to carry it if the market is to change for the worse.
You can hear more of Remillard's advice in a recent episode of The Principal, the Mortgage News Network's daily podcast. For the Mortgage News Network, I'm Sarah Wolak.
Come to Originator Connect in Las Vegas to learn more ways to grow your business. Many of the industry's top brokers and executives will share their insights starting on August 19th. You can also get access to Originator Connect if you sign up for Maximum Acceleration on August 18th. Maximum Acceleration is a day-long conference that features advice from top industry experts, as well as SEAL Team 6 vet Don Mann and creative expert Nir Bashan. For a full list of speakers, go to originatorconnect.com. In other news, Black Knight's earnings in the second quarter were way down from earlier this year. The $40.3 million in net income was down 88% from the first quarter. Despite that drop from earlier this year, the figure is still up slightly from this time last year. That number was below the consensus of analysts surveyed by Zacks Investment Research, but Black Knight says that the earnings met their expectations. An executive also said that the report highlights the ongoing strength and resilience of our business as we continue to expand and extend our relationship with existing clients, win new clients, and deliver innovative new solutions. The company also said that things are progressing in its sale to Intercontinental Exchange. ICE announced in May that it plans to buy Black Knight in a cash and stock transaction valued at $85 per share.
This program was brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness.
For more on these and all of today's top stories, go to mortgagenewsnetwork.com.